Here are 5 powerful ways rich people make money using debt. Let's get into it. Tip 1. Leverage in real estate. First up, leverage in real estate. Wealthy investors rarely buy properties outright with cash. Instead, they use a mortgage, often putting down 20-30% and borrowing the rest. Why? Because if a property appreciates 10%, that return is on the full value, not just their down payment. That's called leveraged return, and it multiplies gains. Plus, rental income can cover loan payments. Over time, tenants pay down the debt while the property grows in value. Tip 2. Business credit and OPM. Number 2. Business credit. The rich often use other people's money, or OPM, to fund businesses. That means using business loans or credit lines to grow faster without risking personal cash. Think of it this way. If a $50,000 loan helps scale a business to $500,000 in revenue, that's strategic debt, not dumb debt. Tip 3. Tax-Deductible Interest. Here's a slick move. Tax deductions on interest. The wealthy use debt that's tied to investments or business because the interest can often be deducted from their taxes. That makes the cost of borrowing even cheaper. Meanwhile, their investments, like real estate or dividend stocks, keep making money. Tip 4. Infinite banking concept. Number 4. The infinite banking concept. Some rich folks use whole life insurance policies to borrow against their own cash value. Tax-free. It's like being your own bank. You borrow against your policy at low interest while the policy keeps growing. It's a wealth preservation tool and a smart debt strategy rolled into one. Tip 5. Stock portfolio loans. And finally, stock-backed loans. Ultra-wealthy investors borrow against their stock portfolios instead of selling shares. This means they get cash without triggering capital gains taxes. Plus, if the portfolio keeps growing, they're building wealth while accessing liquidity. That's next-level wealth strategy. So there you have it. 5 ways the rich use debt to grow wealth, not sink in it. Remember, the key difference is strategy. Smart debt builds assets. Dumb debt buys liabilities. If you learned something new today, hit that like button, subscribe to Capital Craft, and turn on notifications so you don't miss more money smart content.